this is Forex Factory. There are many other websites out there, okay, such as FX Street, Daily FX. Type in Forex Calendar. I'm sure there's other websites out there as well which will show the calendar. I'm not looking at the calendar right now, but I'm going to get to it in a moment. But I just want to touch base on some of the things I was mentioning in the technical analysis video. So forums, as you can see here, I've literally just come onto this web page now, and I have coded a profitable EA. Now what? Okay, Brave New Heart News Scalping System, enhanced version of Auto Profit 3.0. All of this nonsense. What else we got on here? Diagonal channel-based dimensions of support and resistance. Guys, what I'm trying to say is, these are the people who hang out in forums. These guys are not profitable traders. Oh, this is. Let's have a look. So let's have a look at this dude. I'm not sure if it'll allow me to because I'm not logged in. Okay, so you have all of this. This is some guy who's created some kind of robot. Okay, come on, it just opens random trades. What the hell are you trying to do? Now, by all means, if you're new to the market, depending on what level you are actually at, I used to roam through these back and forth, day in, day out, to see if anybody would give me a helping hand. And you can just go through, you can witness all of this yourself. Look at the state of this. This is just absolutely stupid. And people just hang about all day and waste so much time going from one forum to another forum, to another forum, to another system. Candle martingale EA. A martingale system is like a roulette system. And all of these little results that people post, it's more likely to be demo accounts, because any EAs, which is basically a robot, expert advisor they're called, and you can program them on MetaTrader, they just don't work. Reason being is because, yeah, they might give you some result on a demo account, but when the spread factor comes into it and slippage is a factor on a real account, these results are no longer credible. So as you can see here, just an example of some of the forums which I was mentioning in the last video, and we don't really want to get into. So we have other aspects of news: secret meeting of leaders in China, Citigroup, and so forth, negative interest rates. Yes, they are some important headlines right there. So let's have a look at this one. So negative interest rates, and you can go on here and you can actually see this was the main announcement out of the Bank of England last week. And you can go on here and just get information on some of the main topics: interest rates, unemployment claims, unemployment figures, and so forth. So yeah, by all means, we can spend some time getting into the macro side of things. But let's just go back 1 second. What else we got? US employment situation, and so on. Anyway, just as an example, there are various forums that we don't want to get stuck into. We get some of the headline news as well. Bloomberg and stuff like that. I used to sit there and watch Bloomberg only to really learn and study what the central bank announcements were doing. What I mean by doing was the central bankers will come out and they will talk on monetary policy, about interest rates. They may round up some of the other smaller headline data figures, such as, so this is for the week ahead. Let's just have a look at last week. So last week, Sunday, Monday. So first and foremost, guys, weekend, there can be some fundamental announcements. Okay, if there are, there could potentially be some market movement over the weekend, which will result visually on the chart as a gap. A gap in the chart often tells us that there's been some kind of announcement over the weekend, but obviously due to charting platforms and broker data platforms not being open when the market is open, 10 p.m. Sunday GMT, the price then reflects that. That's all the gap is. So with Monday, we had quite a quiet Monday last week. So here's the time. Always ensure as well your times are correct, because you will in fact get to customize all of this. So 1:13 over here on Saturday in England. So always ensure that. Now, firstly, your GBP data is going to come out in the London session alongside your European data. So just bear that in mind. It's generally between 7:30 AM GMT and 9:30 AM GMT. Your US data is more or less likely to come out, see here, 2:45. However, it starts around 1:30 and goes all the way to 7 PM. So you're going to get the US data then between 1:30 and 7 PM, and also Canadian data releasing. So if you have a trade that you're eyeing up, let's say on the GBP USD or the Euro in the morning, however, you have some news announcements, and if they are high impact, which is the red, so you get low impact, medium impact. So the low on here is the yellow, medium is orange, and the high is the red. The only news data releases that we really want to consider are in fact the high ones, to be honest, just to simplify things. I'll go into more of that in a moment anyway. But yeah, GBP and Euro in the morning. So if you're looking at a trade setup in the US session, European session / London session, always ensure that you've checked the calendar. And if it is a high release piece of data, you may want to just stay away from that setup, and you can come back half an hour to an hour after the news has been released to see, okay, is my setup still telling me I can enter? Has anything changed? Has it already done the movement that you were expecting, or is the market completely reversed? And then you can reanalyze and then take your trade and base your decision from that. Now, currency across here, you can actually go and edit this as well. So I'm only looking at yen, Aussie, euro, pound, Canadian and US data, because and I've got some New Zealand in there as well, but I might take that out because I don't really look at the NZD USD or any NZD pairs. So it's completely up to you how you customize all of this. It's great as well because there's an app. There's many apps out there for your phone, and you can set like the alarms on these, and you can also go ahead and, which I do recommend, you can take a screenshot of this and you can stick it in your journal for the week ahead along with your analysis over the weekend. And the thing is with the fundamentals is we don't have to dive deep into it. What I mean by that is we don't have to go on Google and start searching what these are all about, because half the time the market won't even respond and correlate to these releases, which I'll get to in a moment. But we just don't need to spend so much time thinking that all of the things that we see on this calendar are going to impact the market there and then. Some do, some don't. I used to go on Google, type in a certain announcement, and you're going to get a 50-50 viewpoint and a standpoint, and you're going to find articles which may, to the newbie, seem that they are quite helpful. However, to be honest, they are out of fashion, out of date in terms of how they're written. And also, it's more like, okay, if it comes out better than expected, it might go up. If it comes out worse than expected, the currency might go down. Well, that's damn obvious. However, sometimes the market will respond in an absolute opposite manner. So over here, so let me just recap. We got the date, we got the time, we got the currency, we have the impact. High is the red on here, medium is the orange, and low is the yellow. You can find out further details on this. So for instance, as you can see here, we can read about this. We can see the historical events as well of the G20 meetings. That's when all of the world leaders get together and discuss how high, if it's going to go down. We have the forecast. So we have the previous figures, we have the forecasted figure, then we have the actual. The actual will not be released until 12:50 AM that day. As you can see here, it was better than expected. So it was forecasted lower than the prior. However, it came out higher than what was forecasted and higher than the prior. However, it's only a low impact piece of data, so it wouldn't have really had too much of an impact on the currency value there and then. Yes, by all means, we can see little flickers in the market up and down, maybe a few pips, maybe 20 pips, 30 pips. But overall, we don't really want to pay too much attention to these, because if we waited for every single news announcement to pass, or we tried to trade around every single news announcement, one, it's just going to become so much of a headache. You're going to be paralyzed by all of these different news factors. And on the other hand, you might not even be taking too many trades either. So that's that. And then you can go through and you can look at all of the different aspects of the graphs and the prior figures and so forth. But guys, if you can, just stick to these ones. The high impact makes things a lot easier for us. So as you can see for the whole week ahead, well, this is obviously the prior. We'll go on to this one in a moment. But we can see all of the figures that came out. Now, FOMC, this is a big one. We don't really want to be trading around FOMC at times. And FOMC for the USD is going to impact all dollar-based pairs. This is where they may come out and discuss interest rates, changes in interest rates, inflation, and so on. And we can see huge spikes in the market when this goes on. And I'll show you some examples in a moment. Unemployment claims for the US dollar, quite important too. And we've just had, Friday just gone, the non-farm payrolls. Non-farm payroll is over, where are we? Okay, yep. So non-farm payrolls and unemployment rates and so forth are always going to come out for the US dollar, and it's going to shake up the market. I'm going to show you the Euro USD in a moment. But the other one I was looking for, where is it? We've got the Bank of BOJ. Let me just show you quickly. Let me just pull up the fundamentals in the book. Get to page 42. Well, that popped up. Right, fundamentals over here. We have all of these. Now, this is what I'm talking about. Central banks, financial institutions. So Fed, BOE, ECB, RBA, BOJ. These are all the central banks. And we can see here BOJ, BOJ. What else can we see? EBA. Okay, that's European. And so on. So if we're struggling with this, we can just refer back to the book to see which institutions and which central bank players are in fact going to be doing a talk, speech, and generally it's going to be high impact data. So how do we get around this? So as you can see, I've already gone through and labeled. So we've got non-farm payroll in there, which is a major one. And we also have interest rate decisions, manufacturing data, employment data, GDP. These are the main ones we're going to be looking for. So let's just have a look at the week ahead. Sunday, bank holiday in Australia over there. Monday is quite a busy day. The only thing I'll be looking at on the Monday is probably manufacturing PMI. Okay. Oh, sorry, this is the one just gone. I thought I was skipping behind there. Okay, so Monday, trade balance, China, that's going to be minor. That whole day to me is minor, okay? Tuesday, manufacturing production, again, that whole entire Tuesday is relatively minor to me as well. So Monday and Tuesday out of the way. RBA, speech at 4 in the morning. I forgot to mention the yen news and the Aussie news is going to come out more or less in the mornings, around 12:30 to around 5 a.m. GMT. So if you have a trade on the Aussie or the yen, you want to wait. If it's a high impact piece of data going to be released in the Asian session, you want to just maybe be careful of leaving trades overnight. That's if you are living in the UK. Point being, always check what's ahead, okay, in that session. And then we have unemployment claims on the US dollar. And then over here, we have a few more on the Friday. To be honest, that whole entire week is looking quite clear. The things I'll be looking at for, obviously, interest rates, FOMC, Bank of England announcements, stuff like that, employment pieces of data, and non-farm payroll. So non-farm payroll, we're just going back to the Friday just gone. This is what non-farm payroll looks like. So we have the unemployment change and trade balance of Canada. And then we have here. So non-farm payroll, non-farm employment change, that came out pretty positive. Unemployment rate was pretty negative as there's more people unemployed. for that particular month. And this is what the first Friday of every month. It's the only news announcement which actually doesn't have a date. And it's always judged against the USD, because the USD is in fact the reserve currency. That's why all of the major currency pairs include the US dollar. So let me just show you some charts now quickly. Now over here, let me show you this one. So this is my 4-hour time frame on the GBP USD. We are showing signs of bearish momentum overall. There's 3 little clusters: lower swing high, lower swing high, lower swing high. And overall on the daily time frame, so the daily, that's the weekly, on the daily time frame, GBP USD is in fact expected to come a lot lower. And what came out last week, if we relate this to the chart on, where is it? If we relate this to the inflation report over here at 12 p.m. on the Thursday, so we have 1, 2, 3, and 4. The drop on the GBP USD this day, this was a result of those fundamentals. Okay, so we have the fundamentals coming out, and overall the price structure is in fact bearish. So reading the technicals, we are looking for GBP USD to decline, and what's actually happened here is the fundamentals have reflected bearish momentum. So the technicals have already painted a clear picture as to this market is bearish and we're ready to come down and make new lows on this pair. The fundamental news announcement has then came through negative, which has then given people more or less a viewpoint to say, okay, that's why GBP USD is bullish. Often we can read the charts, and you'll see this as you get your own chart experience. We can say, okay, this is going to fall or this is going to rise. The news will come out and it'll do it for us. So news overall is more or less a mask, okay, for manipulation. And the technical analysis on the chart will always paint the clear picture first and foremost. Often before a news event, a big news event, we will see a run up. But again, if we have our key levels on there, the market will respect and respond to the key levels. The fundamental announcement will come out and then boom, it'll go the opposite direction. So the market's trying to entice traders to go one way. Market may consolidate for a while. The fundamentals may be released and then boom, it goes in the overall direction anyway. So that's that. We had the non-farm payroll as well. Let's look at how the Euro USD did. Euro USD recently, we popped all the way up on the back end of some news last week. We were floating around the weekly support, which we have been doing for so long now. The setup I had on the Euro USD before any of this news came out was a simple fib. So we had A, B, we stored in between the 15 and 61.8 level, and we also hit our head on the daily resistance there. We had a bearish engulfing, this 2 candlestick formation here, and overall the fib is giving us a nice lineup as a target right on our daily support there. Look at that lineup, we have 2 confluences for a target. So after the confirmed reversal around here, around the fib point and also the daily resistance, I'm looking at Euro falling another 200, 300 pips. And what actually happened was the news came out, okay, waited for non-farm payroll. On a smaller time frame though, if we could just look at this, on the 4-hour time frame, that day, let's have a look at the 2-hour time frame. Boom, the market came up, bullish, 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 spiked up, news came out, boom, came all the way back down to the downside. Now, with that being said, that is a classic piece of manipulation there, enticing the trader to go the opposite direction before actually going a lot lower based upon the news. So this is why top-down analysis, reading the higher time frames, is in fact of some importance. We don't really want to go too low on the time frames because we will maybe get trapped into a lot of the mess as so. So we want to use the calendar as a guideline. Some days we do not want to trade like FOMC, and a big no-no is actually waiting for news to come out and then going into the trade there and then. The reason why we don't enter straight off the fundamentals is because the spread will widen. The spread the difference between the bid and ask, the two quotes that you'll see on your broker platform. Generally, let's say the Euro USD was 1.5. Upon a major news announcement like non-farm payroll, the bid and ask will in fact widen, and you'll end up paying maybe 6 pips to get into the trade. Brokers love it. Brokers will always try to egg people on to read the news and get involved in all of the different news releases that are out, non-farm payroll strategies and so forth. To be honest, it's all a load of nonsense. When non-farm payroll comes out, by all means, take the day off. And when any other major news releases come out, just maybe bring a stop loss past break even. We can always cover our trades. That way, if we have a longer term projection, like on the euro, let's say we were short after this bearish engulfing candle here, stops above the highs, our target's down here with a great risk reward. What we could have done is we could have maybe brought our stop halfway. So if our stop was 100 pips, we could bring it down 50, just in case. Because if we knew non-farm payroll was coming out and we could potentially spike all the way back up, we just want to try and keep the risk minimum. So there's different ways, and you always have to let the trade breathe as well. So that, as you can see, these are nice little lower swing highs now. A new lower low is expected down here. So overall, the market will follow the technicals, but in between, you're going to get all of the fundamental announcements. Try not to get wrapped up in them too much, and then just be aware of when to stay away from the market, because we can see huge sort of moves like this, boom, eliminating everybody who's short in the market, only to then go and boom, continue in that overall direction. So it's a mask for market manipulation. We want to stay away from it, follow the overall trend. Always lock in some profits if you have to. If you're unsure as well of what's actually going to happen with a data release, by all means close the trade, come back a few hours later, or come back the next day. So fundamentals, Forex Factory, stay out of the forums, only look for the main major news announcements. Write it down on your notepad, which I mentioned in the last video, and by all means always take profits if you can. And another handy tip is to maybe even take 70% off a running trade if you have running trades open, and never ever ever enter as soon as news comes out, because you're going to end up paying 3 or 4 times the broker spread. This isn't really made clear to anybody, but that's how brokers, again, make a lot of money from people trading the news. So I hope that helps. On to the next video.